Hey everyone, welcome back to the channel. In today's video, we are talking about IPOs, initial public offerings, because this week and next week, four very well-known companies are finally letting everyday investors like myself and you buy stock in their companies for the first time. So what is an IPO? An IPO is when a private company sells shares to the public for the very first time on the stock market. Up until now, only insiders, employees, and big early investors, think banks, hedge funds, and wealthy clients have been able to get in. They usually get in at a set price before the market opens. But once the IPO goes live, that's when regular people can buy shares. Now here is the interesting thing. On the first day of trading, stocks tend to swing wildly. Sometimes the price jumps way up because there's more demand than shares, and other times the price jumps down very quickly because early investors are selling to lock in those profits. That's why IPOs are really exciting, but also really risky. So we're gonna look at 4 IPOs that everyone's talking about: Klarna, StubHub, Gemini, and BlackRock Coffee Bar. I'll break down what they do, whether they're profitable, how much they're pricing their shares at, and why. Let's start with Klarna. This is a buy now, pay later company that you've probably been seeing online. Instead of paying everything all at once, Klarna allows you to break up your payments into smaller chunks. So let's start with the basics. Klarna is selling shares within the range of $35 to $37 per share, which values the company at about $14 billion. They chose that price range to balance investor demand along with their desire to raise $1.2 billion. Now, they also looked at competitors like Affirm to stay competitive with their pricing, but also not overvalued. In the second quarter of this year, Klarna brought in about $823 million in revenue, but they are not profitable. They also lost around $52 million. Now, Klarna argues that their huge sale, over $100 billion in yearly purchases processed, will eventually bring profits as more retailers and shoppers use the service. Now, people are really excited about Klarna because this is a brand that most people recognize, and their IPO was oversubscribed, meaning that investor demand was really high. Now, the risk with this company is that the buy now, pay later scheme is really controversial because a lot of people end up going into even more debt with it. And also there are a lot of regulators that are watching this type of company. Next up is StubHub, the ticket resale platform. If you've ever bought tickets for a game or a concert, you've probably used StubHub. So StubHub is pricing its IPO at around $22 to $25 per share, giving it a valuation of around $9 billion. They picked this price to compete with rivals like Ticketmaster and also raise around $850 million without pricing it too high that it would scare off investors. In 2024, StubHub made about $1.8 billion in revenue, but StubHub is also not profitable. Last year, they lost about $2.8 million. So what are they saying? StubHub says that as concerts, festivals, and sports grow, so will their company. They see themselves as the go-to company for resale tickets. So why are people so excited? Well, StubHub is practically a household name when it comes to ticket sales, and with live events booming, investors see a lot of potential here. Now, the risk is that ticket sales are crowded and people tend to complain about those high fees. So StubHub is really going to have to prove that it can take its brand recognition and turn that into a profit. Now let's talk about Gemini, the crypto exchange founded by the Winklevoss twins. Yes, those same twins from the Facebook story. So Gemini is pricing its IPO at around $17 to $19, aiming for a valuation of $2.3 billion. Now, they set this range lower compared to other tech IPOs to attract investors, especially because crypto stocks are seen as higher risk. But the numbers are rough for Gemini. In the first half of this year, Gemini made about $68 million in revenue, but they had a huge loss of $282 million. Last year, they lost $158 million, so no profits. Now, Gemini is saying that the crypto market moves in cycles. They also say that losses are part of the downturn, but as institutions and investors return, they believe their regulated US-based platform will be a big advantage. So why are people excited? Well, first of all, it's crypto. It's also the Winklevoss twins, and they're promising a safe exchange for the next wave of crypto adoption. So what are the risks? Well, first of all, crypto is really unpredictable. There are a lot of regulators circling crypto as well. And in terms of Gemini specifically, its revenue is shrinking and its losses are growing. Finally, let's talk about BlackRock Coffee Bar. They are being called the next Starbucks challenger. They currently have 158 locations in 7 states, and their focus is on quick drive-through services. So BlackRock is selling shares at $16 to $18 per share with a valuation of about $860 million. The price was set to keep them affordable to investors while also allowing them to raise about $265 million. Now, compared to Starbucks and Dutch Brothers, BlackRock Coffee Bar is much smaller, but it's using that smaller type of company to get that underdog feel and attract more attention. Now, in the first half of this year, they made about $95 million in sales, but they are also not profitable. They lost about $2 million. So here's what they're saying. BlackRock believes that by opening more stores and really leaning into that drive-through trend, their company can become more profitable. This is basically what the Dutch brothers did when they scaled up. So why are people so excited about BlackRock? Well, it's coffee. Coffee is huge. Everyone understands it. And investors really like that idea of, could this be the next Starbucks story? Now, here is the risk. They're still small, they're really up against giants, and if they scale too quickly, it could be really risky. So there you have it, 4 IPOs hitting the market right now. Klarna, StubHub, Gemini, and BlackRock Coffee Bar. And the big takeaway, none of these companies are profitable right now. They're asking investors to believe in their future growth. And this isn't uncommon with IPOs, but it's something to understand before jumping in. Now remember, IPOs can be really exciting, but the first couple of days of trading can be really unpredictable. A lot of people can be caught up in the hype, but the real question is whether these companies can deliver profits down the line. So the goal of this video wasn't to tell you to buy or to sell. My goal was to use these IPOs as an example for you to look beyond the headlines and make sense of the numbers. But I'm also curious to hear from you in the comments below. Which IPOs do you think have the best shot at success? Write in the comments below. And of course, if you like this video, make sure you give it a thumbs up, subscribe to our channel, and join the journey.